Well, India's Prime Minister has hailed the remarkable turnaround of India's banking sector. The banking system was seen to be in a precarious state 10 years ago, carrying the burden of large NPAs or non-performing assets, basically bad loans. And this had also hit medium, small and micro enterprises badly. Now the banking sector has posted a very healthy profit of $37.5 billion. It has had a massive impact on financing India's economic growth. This story tells us more.
India's banking sector has posted record profits of $37.5 billion. Prime Minister Narendra Modi termed it a remarkable turnaround in the last 10 years. He referred to the misuse of the banking sector in the years prior to his taking office by the previous UPA government in disbursements that created several non-performing assets for the banks. The Prime Minister said a healthy banking system will improve financial inclusion and credit availability to those who found it hard accessing finance in the past. The public sector banks have been leading the charge in loan disbursals. Of the $37.5 billion profit, $17.5 billion come from the public sector. This marks a 39% rise in net profits compared to financial year 2023. What the bank sector earned in profits is equivalent to the total quarterly profits of all listed companies in the first 3 quarters of the fiscal. Banks have outperformed IT services, which had been driving economic performance in recent years. It is important to note that public sector banks have performed exceedingly well since cleaning up their balance sheets. The net profit of public sector banks has more than quadrupled in the last 3 years. The Indian economy is poised to become the third largest economy in the world. Given the economic size of India and its acceleration towards that inevitable goal, India is looking to create at least a couple of banks of global size. Prime Minister Modi has predicted a significant boost to stock markets following the election results, anticipating his government retaining office for a third successive term. While speaking to NDTV, he pointed out that the Sensex had moved from 25,000 to 75,000 points, an unprecedented march, highlighting the confidence that investors had in the economy. Looking ahead, after the operationalization of the Chabahar port, India's external trade will receive a significant boost, and import costs of gas and oil will decline. India's Commerce Ministry says international north-south transport corridor and Chabahar port will enable 30% less costly imports compared to the Mediterranean Suez route. India is clearly on an accelerated economic growth. Bureau Report, DD India.
And to throw more light on this story, we are privileged to have with us Anil Padmanabhan, Senior Economic Affairs Journalist. Thank you very much, Mr. Padmanabhan. What does a robust banking sector actually imply? I mean, could we look back and say it was good economic performance in overall, or is it good banking regulation to a large extent?
Mark, it's a bit of both, but let's begin with your primary question, like why do you need a robust banking system? As we all know, the financial sector is what lubricates any economic activity in the country. So if buyers have to contract to sellers, they need to pay through some medium, and that's the financial sector. And that's where the banks are right in the center of all of it. Now, what we saw prior to the last decade was post the global financial crisis, there was a massive upheaval in the domestic corporate sector, and the banks took a substantive hit for a host of reasons. So by the time the decade 2014 dawned, the incoming government inherited dramatic losses on the banking sector. The balance sheets of banks were in trouble, in red, and so were the corporates. So neither could one borrow nor could one lend. And exactly why economic activity took a nosedive.
Yes.
So in the last decade, what has been done is to fix it through regulation, oversight, as well as a very important, the Insolvency and Bankruptcy Code, which completely changed the terms of engagement of corporate India with their borrowers. It's no longer a case where a borrower can take money and not return it and then string banks along and ruin their balance sheets. Now it can be turned over to an agency which will examine the pros and cons and decide to bring in a new owner, as we have seen in so many instances in the last decade. So a combination of this is
Absolutely.
what has fixed the banking system in the last decade.
Mr. Padmanabhan, also, how does a profit of, let's say, $17.5 billion for the PSBs help government expenditure?
See, it doesn't, I mean, there are
Not
dividends
directly.
that accrue to the government. So, in that sense, they get some revenue receipts. But most importantly, the bank's balance sheet are now in an excellent position for them to lend. And unless you lend, you cannot grow an economy. Every economy needs credit. And that has been missing, partly because the banks are not able to lend, and also because the corporates are not willing to borrow, because they were not willing to undertake new investments. But we are beginning to see a change in those circumstances. We are seeing green shoots plus brownfield projects looking to expand capacities as the economy gains momentum. So this is the moment where banks need to have a good balance sheet. So healthy profits are an excellent launch pad for them to start extending credit in the economy, which is a lifeline for investments.
And will this, will healthy banks also result in a growth in big development infrastructure projects, not only in India, but India can also build outside, like, for instance, we are going to do with the Chabahar port?
See, Mark, the problem with infrastructure projects is it's of long duration. So they have enormous gestation. An average period would be 15 to 20 years. Banks don't and cannot take such long-term exposure. So they can come in at lesser gestation projects, but the larger infrastructure projects will have to be done by specialized institutions. There are several of them the government has created, and those are the guys who will take the load on that. But yes, in working capital, in credit for less than, say, 7 years, which is a normal average exposure that banks can take, is where the banks will operate. So Chahabar and projects of that massive range of investments are not where the banks are going to enter, only as probably, as a partner in a larger credit consortium. But they cannot be the primary movers of credit for big infrastructure projects.
Also, can we expect more consolidation then in the banks to create what the finance minister was saying? We need, a few globally competitive large banks.
See, Mark, that in theory, that's a fantastic idea, because you do need fewer banks with bigger balance sheets who can take bigger risks. But we have to look at the reality of circumstances. It's not easy. The government has been trying to push the ball on this agenda, but it has a lot of pushbacks. There is a staff involved, these branch networks, they overlap with each other. It's extremely complicated. But yes, if the government is indeed determined, so it can move in that direction, but it will be relatively slow. Don't expect any rapid change where suddenly 14 banks collapse into 3. May not happen so fast, but the trajectory, I guess, is clear if the government is clear on its own intent.
Okay, a final question, Mr. Padmanabhan. Can banks give more money to depositors in terms of interests with these kind of profits, or should people only be invested in the shares of the banks to get the dividends?
Mark, see, banks will give you higher interest rate on your deposits when they need that kind of liquidity to lend. At this point, the credit has not really taken off. So, and inflation also is just coming down. So when inflation starts decelerating, the banks will obviously be offering a lower interest rate at that point of time. But for interest rates for depositors to improve, it requires a different circumstance. I don't think this is it. This is a moment where deposit rates are likely to stay sticky where they are, may not go up dramatically, may not fall, but we have to wait and watch. But this is a transit point, like a point of pivot, where banks are looking to up their credit operations.
So if you're investing, you will be an investor in the banking sector at this point in time?
Oh yes, I mean, if you look at the balance sheets and you look at the overall stock market and all the equities involved, like they say, a rising tide lifts all boats. So it is lifting all the sectors at this point of time. And we have to wait and see the Q4 GDP numbers are due in a few weeks from now. and that should give us a sense about how the last fiscal year moved. Expectations are there at about likely to average 8%, which is a very excellent record. Remember, just 4 years ago, the economy contracted by 23%. And so if this momentum is maintained, definitely you should stay invested. I mean, I cannot identify stocks, but yes, overall equity markets are booming. It's a good time for investors.
We leave it there. Thank you very much, Mr. Anil Padmanabhan, Senior Economic Affairs Journalist. Thanks for your inputs.